Austin, very good to see you. I'm glad we have a chance to talk today because I wanted to ask you about the recent market volatility. Concerns about a cooling U.S. economy led to a market rout in early August, with the Dow down as many as 1,100 points. The market has since rebounded for the most part, but I want to ask you about what led to this volatility as we take a look at the S&P 500's performance in the past month. We see, mostly green, but still some red on the board.
Yes, that's exactly right, Aaron. This is obviously taking a look at the S&P 500, and we can see that there's a lot of green, but there's always going to be some red. And I think this
Yeah.
really dictates the main story here is with any retirement plan, we want to be sure that we are accounting for market volatility within that retirement plan and overall investment plan, because it's not a matter of if it will happen, but when. So really setting expectations going in the door with investors is really, really important because we know that volatility is going to rear its ugly head.
hmm So, as you mentioned, it has been a strong year for the markets. Was this correction related to what we've talked about before, which is that old concentration risk, where 82% of the movement we see in the S&P is due to only 10 stocks?
I think, Aaron, this is a really often overlooked point with respect to the S&P 500. We know the S&P 500 is largely the most widely followed index in the U.S. here. It represents the 500 largest companies in the United States. But we have to keep in mind that this is a market cap weighted index, which simply means to investors that the largest companies within those 500 drive the vast majority of performance, either good or bad. And we can see that by this graph here. Again, 82% of the performance of the entire index is driven by a handful of companies. And those were the most that those 10 stocks were the most kind of driving the performance to the upside. And of course, in the last month or so, for example, NVIDIA, right? We all know that high flyer tech stock. It actually fell 70% from peak to trough this year in a drawdown. So again, just something to be aware of when we're talking about the S&P 500.
Right. And as we record today, it is up significantly. So it is certainly a roller coaster. Clearly, though, the S&P 500 is not a diversified portfolio, even though it's 500 stocks. How did a well-diversified portfolio handle this recent volatility?
Yeah, that's a great question, and really one that, again, as you mentioned, the S&P, although it's 500 stocks, we know it's only U.S. large cap stocks, right? So we are excluding a vast majority of the investable universe if we're only investing in the S&P 500. And frankly, it was kind of a welcome back story for traditional bonds with this last sell-off in stocks, because bonds actually did what historically they are designed to do, which is buffer some of that stock market volatility. And throughout the last month, we've actually seen a pretty good rally in bonds when stocks were selling off. So a
Mhm.
traditional kind of well-diversified portfolio actually did its job over the last market sell-off.
Great. So this is kind of funny, Austin, but when all of this was breaking, I happened to pop onto Google and ask, should I? And the first option in my drop down was sell all my stocks right now. So clearly, people were feeling very anxious. What do we need to be keeping in mind when we hear these scary headlines?
I think first and foremost, the number one thing to keep in mind is, frankly, it's totally normal, right, to feel that way.
Yeah.
We as humans are emotional beings. That's just how we are wired. But I think more importantly, we step back, take a moment, and kind of look at the 30,000-foot view of our financial life. And really, it's much more than just investments, right? We should have a well designed, comprehensive retirement plan. And we like to say here at Patriot Wealth that really your goals dictate your plan, and your plan should dictate your portfolio. And if you skip over step one and two, we're really missing a big piece of the overall retirement plan, and therefore the investment plan is kind of meaningless. And then we're going to make very poor decisions in stressful times because we don't have that plan to revert back to, and again, potentially miss out on a market rebound in this most recent scenario.
Right. You have a problem if you're going to Google the day of with your hair on fire. So, Austin, if somebody would like your help creating that plan so they don't react emotionally to these headlines, how can they reach you?
Yeah, you can give us a call at 919-322-4113, or send us an email at info@patriotwealthnc.com.
Great. Austin, thank you.
Thanks, Aaron.